Welcome to Common Sense Investing. My name is Cameron, and from April 22nd to the 24th, Microcap Club is teaming up with Planet Microcap to bring 400 plus microcap investors to the Planet Microcap Showcase in Las Vegas. This event so far has 77 companies registered to present to microcap investors. And my goal is to research every single one, hopefully finding the best companies, the best stocks with the best presentation that could impress investors at the microcap conference and send the share price higher. And the second stock that I'm introducing from Planet Microcap Vegas is Creative Realities Inc., trading under the ticker CREX on the NASDAQ. We connect people and brands in spaces and places they love with digital signage solutions. The company has a really nice website with all kinds of different videos showing you what they do, including things like data-driven design and the drive-through of the future. This is a company that services a lot of different industry sectors, really diverse, all the way from retail, entertainment, sports venues, convenience stores, automotive, medical, and healthcare facilities, all kinds of places that this tiny microcap stock can go. This is page 15 from their investor deck, and it's compelling. It's kind of cool. It's kind of scary. This company uses machine learning capabilities, marketing to us with signage based on gender, mood, temperature, age, and even image recognition, meaning they know my face, they know what to sell me. Right? I walk in a store, the ads are going to change based on what this guy wants to buy. I mean, it's a brilliant way to get people to spend more money. So as much as I might want to invest in the stock and cheer the company on, please tell me what stores are using Creative Realities so I can avoid them at all costs on shopping days with the family. Really nice, proven, tried and true, tested business model that so many other successful companies use. Essentially, Creative Realities sells hardware, and the sale of this hardware turns into services for the monitoring of everything that they do. This is a recurring SaaS stock, recurring software as a service. They're saying very sticky recurring revenue from this, and a little bit of alpha from the media sales. So this is very nice typically for investors because you could watch their earnings, determine the future success of the company, because as they sell more hardware in the future, that will add up to more recurring sticky revenue. Some things to like here: a $2.50 share price with a very tiny $26 million market cap currently, which means very small shares out there, 10.5 million shares, 15% insider ownership, so they have skin in the game. And because this is a US-based stock, they do have some institutional ownership, though there is room for a lot more if this company continues to execute. So that's a good quick introduction to what the company is, who they are, what they do, and I hope that helps you along your investing journey. But let's get to some of the potential rewards of investing in this company and some of the potential risk and whether or not I want to put them on my watch list for the Planet Microcap Vegas show. Do not forget that I'm not a financial advisor, and I'm definitely not your financial advisor. I don't know your financial education, experience, your risk tolerance, or anything else about you. These videos are not a solicitation for you to go buy a stock. They're here to create good discussion and introduce you to a stock that might be worth your time to go research and form your own opinion. 6-point value creation plan slide, and a couple things that I really picked out as something that I wanted to discuss in today's video, right? Improving gross margins, accelerating revenue growth, ARR run rate of $18 million as of June 2024. They have guidance on an exit run rate of 18 to 20 million as of March 2024. So this is a little bit old, but the company is growing top line revenue. They do have some analyst coverage, and they're saying that this is a buy outperform rating at $7 to $10. I mean, they're sitting at $2.50, so that seems a little bit unrealistic. And probably the reason that they're sitting at $2.50 is one of the risks that they pointed out here: reducing their gross debt from 20 million to 15 million. So that's still a lot. $26 million market cap with 15 million of debt as of the time of this presentation. Net debt leverage ratio from 5x to 2.4x. So they are reducing their debt, and they have a new conventional credit facility with First Merchants Bank. So a good start to the risk reward profile on this company: growing top line, questionable bottom line, and some debt to worry about. And that does transition to my largest red flag for Creative Royalties. Even though I love the business, the product, the service, the business model looks really good. These are my questions for the company at Planet Microcap Vegas, right? Total cash compounded annual growth rate has been declining significantly. In the meantime, their short-term debt has been increasing, as has their long-term debt. And that has resulted in kind of the death of shareholder value over time, which is pretty significant share dilution. So ultimately, some red flags or warning signs, questions that I have for the company going ahead into Planet Microcap Vegas from their Q3 2024 earnings, and most of this put together using the website Guru Focus. I mean, some things I've already pointed out, right? Cash is decreasing, debt levels are increasing. There's some, lack of visibility into the future of this company caused by the timing of large customer orders. So definitely some significant concerns to talk about with management. In saying all that, and I know it sounds a little bit ugly, right? Debt, share dilution, not something I'm typically interested in. It's not the end of the world. Again, from their Q3 2024 earnings, significant improvement and growth from the company. Revenue up 25%, gross profit up 24.5%, adjusted EBITDA reducing expenses. EBITDA is up 53%. The company, despite having a delay in some of the orders, causing a little bit of lack of transparency, they are saying that they still have a robust pipeline. So combined these numbers with sticky recurring revenue, and there's a lot of things to like. It's too soon to just throw this one in the garbage pile. Revenue has been compounding at 16.8%, and that is despite this large drop during COVID. This is a public signage company. So how much did COVID absolutely destroy this company and cause some of their debt? And how much can they rebound and recover from this detriment to their company's performance during a time where that wasn't their fault? Overall, I like the company. I like the pitch. I really like this guy sitting in the corner with the thumbs up. And yeah, good enough company to put on my watch list. Definitely have a lot of questions for management. Really look forward to their answers. Thank you for watching. My name is Common Sense Investing. As always, I really appreciate your time.